Well, the stock that we're focusing on is Jindal. So, in the last 1 year, many stocks have done well, but a few stocks have corrected nearly around 30% from the recent peak. And that's why, in fact, that stock did come on my radar. It's had a good run, but from the peak of January, it's seen a bit of a correction. What does the company do? Well, they have various verticals. They are into large diameter pipes, and some of those, pictures are up for you on the screen. It's basically into oil and gas. It also deals with water transportation. They need coils, which are sourced domestically. That's the second part of their business. That's a ductile iron pipes business. Over there, they need iron ore. That's imported, and then, in fact, it's fed into the blast furnace. And also, they have the seamless pipes business. Now, that's used in power and refineries in the bearing segment as well. And finally, the pellets is what they deal with. That, in fact, has seen a big surge in the last 1 year or so. If you're taking a look at the contribution coming in from individual segments, well, in fact, another important point is that all these capacities are running at more than 75%. And in fact, the management is indicating that 15 to around 35% is what the contribution could be from every segment. But in the last 1 year, well, they had a higher contribution coming in from the saw pipes. That, in fact, is the large diameter pipes. That's the 8 saw as well as the L saw. Over there, that was nearly around 40%. That's because they have a high amount of dependability on, in fact, the water segment. So, if you just take a look at the contribution coming in from various industries, well, the water segment is up in there with a high contribution. Exports as well contribute nearly around 25 to around 30% of their total order book as well as their revenues. Now, the big trigger for them really was that they de-subsidized some of those divisions. So some of those divisions were into EPC, water to energy, and railway wagon manufacturing. They got rid of all these divisions, and that is very, very important because otherwise the finance cost used to come in the consolidated entity. Now, the two main reasons is that they de-subsidized that. That's they removed it from the listed entity. One was to focus on the core competency. The second was debt reduction. Now, if you take a look at the total finance cost, the consolidated finance cost was much higher than the standalone. Now, with them de-subsidizing some of these entities, well, both these two will merge or come closer towards each other. And also in the first 9 months, they made a good attempt in reducing the cost because it's come down by around 5%. They've repaid some loans and they've refinanced some loans as well. The debt picture currently is nearly around 4,200 crores. That's including the working capital in their books. And the average borrowing cost has come down below that 10% odd mark. The first 9 months of the year were quite good. Good top-line growth we saw. There was some bit of margin flattishness or some kind of compression there at around 12.5%. And the profit number as well looked quite good. That jumped up by nearly around 14%. There's a good order book over there. Strong order book visibility going ahead of more than $1 billion. So that's important. And the key issues to track will be, if they're going to be transporting water, if they're going to be into water sewage as well. Well, government spending is going to be very important. Second factor is stability in oil prices, because if they're going to be dealing with the oil and gas space as well, then that's rather important. And also implementation of GST. That impacted margins in the last few quarters. Now, quarter 4 and going ahead, we'll have to see what happens out there. And their pellet plant, remember, it's located on the west. All the other pellet makers we talk about are on the east. So their geographic, location is something that helps them with the spike in pellet prices. And also they have their captive iron ore mines. If you take a look at the shareholding pattern, well, the promoters hold roughly around 53% and a couple of large funds as well in there. Interesting stock, corrected a goodish bit from the recent high. Let's see what happens going ahead.
Okay, Nigel, thanks a lot for that. That's mid.